Hello, everyone. My name is Alex Schober, and I'm the Senior Analyst for the Southern Cone at Frontier View. With me today is Mariana Cepeda. She's an analyst for Latin America Research. Mariana, do you want to give a quick introduction?
Yes, thank you, Alex. As Alex mentioned, I'm Mariana Cepeda. I'm an analyst for the LATAM research team, and I cover our Andean and Caribbean markets. So I'm excited to get to hear from you on Chile.
Excellent. Thank you, Mariana. So really the idea of today's presentation is to give you an idea of how we see Chile in 2021 and beyond, trying to find some opportunities during Chile's recovery. And this is the agenda that I have prepared for today. Essentially, we're going to start with our economic forecast and some updates to those, as well as the scenarios that we have for Chile. Then we'll talk about some of the key assumptions, particularly the ones that we have for the base case for Chile in 2021 and beyond. And then finally, some business implications, which will mostly focus on consumer trends. And then after that, Q&A. But of course, I like these conversations to be very interactive. So I'll probably ask Mariana if she has any questions throughout the presentation, and she can ask me as she seems fit. So getting started with the economic forecasts and scenarios, I first wanted to show everyone the scenarios just to set a baseline of how we're seeing Chile from a very high level view. You can see here that we do have a little bit of bias to the upside currently for Chile, and I'll explain why that is the case in a minute. But backing up a little bit, you can see the forecasts that we have for GDP at the bottom. So we basically saw GDP contract 6% in 2020. In our base case, we expect a pretty strong rebound of 4.9% in 2021, followed by more moderation of growth. After that, just basically is because we expect political uncertainty in 2022 around the final constitutional votes. If we look at what are some of our key assumptions to the forecast, you can see that basically everything on the top half of the screen is dealing with COVID-19, or at least the external environment as it pertains to COVID-19. And effectively, we're expecting Chile to get mass vaccination by the end of 2021, and probably the earliest large country in Latin America to do so. As far as copper, part of the reason why we do have a little bit of bias to the upside right now is just because the price of copper is currently above $8,000 per metric ton. And that's something that I think that we would expect to stay pretty solid for the most of the rest of the year. And with regards to some of the key internal drivers, I think this is kind of the other end of the spectrum, where on one side, the vaccination and the copper prices are both two overwhelmingly positive pieces of news for Chile, whereas there is still a lot of political uncertainty and political risk as it pertains to the constitutional debates, dealing with the social unrest that started in 2019, and of course we have general elections at the end of this year. Our base case for the Constitution is that we'll probably see some changes only at the margins, and you'll see relatively contentious debate and potentially some protests around key votes for the Constitution. So keep an eye out for the first vote that happens in just a few weeks at the beginning of April, as well as any time that there are any sort of major decisions from the Constitutional Assembly and the ultimate vote in likely July of 2022. And then as far as the general elections, I think this is where things get a little bit hairier and a little bit more uncertain, mostly just because despite the success that we're seeing with the vaccine rollout, Piñera's approval ratings are still only around 20%. It's clear to us that we're probably not going to see an establishment party win these presidential elections, maybe with the exception of Joaquin Lavín. And generally speaking, it seems like there's more pressure or more sentiment for the anti-establishment in Chile if we just look at approval ratings of the major political parties and the candidates that really fall into those parties. So our base case is that we do have an anti-establishment but less extremist presidential candidate win this election. And as far as the downside and the upside is concerned, it's pretty much the exact opposite to one end of the other of everything I just said. To the downside, if we have more of a state-heavy rhetoric prevailing in the Constitution, you have more protests really come out to the same levels they were in 2019 during several moments of this year and next year, notwithstanding key constitutional votes. And then you have a more extremist presidential candidate win in 2000 and later in this year. And on the upside is you have basically, relatively consensual debate around the Constitution. and of centrist and more establishment candidate winning the elections. So overall, again, like there isn't a huge difference right now to our upside versus the base case scenario, especially since we're seeing some of the upside elements taking place already from the COVID and the external environment standpoint. So there definitely stands a chance for Chile here to see some upward revisions to GDP in 2021 at least. But right now we're still being a little bit conservative about any more drastic upward revisions until we see a little bit more of what is happening in the economic data this year. So let me stop here, Mariana, really quick, just to see if you have any kind of initial questions about our Chile outlook. And do keep in mind, I'm going to go through each of these assumptions individually.
Yes, absolutely. Thank you, Alex. What I wanted to ask was, I know that Chile has had an uptick in COVID-19 cases. It's putting some pressure on hospital capacity at the moment. How does this factor into how you're thinking about your scenarios?
That's a good question. So I'll talk a little bit more about the COVID situation in Chile maybe in a couple of minutes, but to kind of answer your question more directly, part of the reason why I haven't gone higher with my GDP forecast for Chile in 2021 is because of this. So basically, we did see more restrictions, and especially the Región Metropolitana, which is where Santiago is located. And because of that, you should probably see economic activity kind of stall out a little bit in March and April, and potentially even May if there's another month of extension of those social distancing measures. So that is baked into the forecast already. The other thing that I'll say, though, is just based on how fast the vaccination is going, and you really have already between, depending on which day we're looking at least 35% of the population with at least one dose of the vaccine. If that pace continues, this really could be the last significant social distancing restriction that's put into place. So that could end up being kind of the key out of this situation, especially towards the second half of this year when you have close to herd immunity already taking place.
Right. Yes, I totally agree. Thank you, Alex.
Great. So breaking this down a little bit more, what you can see out of Chile is that we've seen pretty much a full-fledged recovery. It's definitely not a V-shaped recovery like how maybe we're seeing in the US, and we definitely should expect a little bit of a flattening of some of these growth patterns in 2021. But last year, really, the chart on the left shows that mining activity effectively mitigated an even worse economic downturn last year. Chile was probably one of the least impacted countries in Latin America economically by COVID-19 last year, as opposed to, say, Peru, which contracted by nearly 11%. And part of that is because they didn't have the mining to really pick up for the lost activity from retail or for construction or other activities that basically went on pause for a couple of months last year. And you can see, again, this is really a retail sales recovery too. I'm going to break down retail sales a little bit more when I talk about consumption, but effectively this has been thanks to the pension withdrawals, which has really taken the place and complemented a lot of the massive fiscal stimulus actions that the government has taken in Chile. Confidence has improved as well. You can see that business confidence in particular is above where it even was before October 2019, which is when the protests started in Chile. And I think that's kind of interesting just because it almost seems like a lot of businesses are fully optimistic that we won't go back to such a situation. Perhaps they're looking at the speed of the vaccination, the fact that the economy is doing pretty well across all cylinders. And for that reason, they do feel more optimistic about the future and their current state of the business than they did, again, back in 2019. However, consumers are still a little bit slow to pick up that slack. This probably has something to do with, again, the COVID-19 measures that we saw and the fact that the job recovery is still not close to where it needs to be, which is actually a good transition to my next slide, because, despite the fact that businesses are pretty confident, the job market has not really seen the full positive impact of that. This may be more lagging. You may end up still seeing that business confidence turn into investment, which would help the job recovery. But you can still see that unemployment's above 10%. Labor force growth and formal employment growth has, it's improved, but it's still been stalling out over the last couple of months. And overall, again, this is still probably going to be a multi-month or potentially a multi-year effort to get employment back to where we were before the pandemic. And this isn't just including Chile. This is pretty much every country in the world. It'll probably take a couple of years to get back to pre-pandemic levels of employment. The good news is that real wages weren't severely impacted by COVID-19 last year. We really only had 1 month or 2 months of contraction of real wages, which is good because if we look at other countries in the region, we definitely did have a more significant fall of income. And again, this is something that I think will end up helping consumption overall because, not to steal my thunder too much, but the real wage mass in Chile, which is jobs and then multiplied by wages, is really just the main engine of consumer spending growth. So it's good that we are seeing the real wages staying positive. And then as soon as the labor market recovery really starts to cement, then the real wages will probably be even higher, and we'll see a more self-fulfilling cycle in that regard. Finally, just to finish off this initial part of the presentation, it's worth pointing out that the rebound that we're expecting this year of close to 5%, it's not going to completely make up for all of the economic activity that was lost last year. With regards to Chile, we don't expect pre-pandemic levels of economic recovery until probably 2022, and maybe early 2023 in more of a downside scenario. But the reason why that's the case is mostly just because of lower overall investment, which is leading to a slower employment recovery. If you have a slower employment recovery, you have lower consumer confidence levels, which we've already seen and we just saw a few slides ago. And on top of that, even though Chile does have more fiscal capacity than most other governments in Latin America, they are going to end up being more constrained just because of how much money they spent last year. That isn't to say they're going into full austerity mode this year, but we should expect in the longer term that there is a little bit more consideration put on the budget balance. So overall, that does get us back to 2019 levels in 2022, most likely, which would be one of the first countries in Latin America, if not the first, to get back to pre-pandemic levels of activity. So with that being said, Mariana, do you have any other questions or comments about the first section?
Yes, I actually had a quick question about real wages. So I noticed on the chart that you presented on that real wages kind of increased in 2017 and have sort of steadily declined since. Is there a particular reason for that?
That's a really good question. I mean, I guess like the one thing I would say is just a real wage decline or deceleration from, what is that, about 2.5% to, below single digit or just below 1%. I guess that's not like a huge decline. I know that Chile during this time had very low inflation and potentially didn't have that sort of like wage push inflation that a lot of other countries have kind of towards the end of their economic cycles. But it also may just be because of the fact that the labor market wasn't, as dynamic per se in 2019 versus 2018. I also would say anecdotally from at least October of 2019 through the end of the year, you had the protests. So that did cause definitely a fall of real wages during that time. It also just generally caused a worsening of all economic conditions. So that would be kind of my main assessment, but that is a good question.
Yeah, no, that is really interesting. Thanks, Alex.
Thank you. Okay, so let's talk about some of these key assumptions. If you recall from our scenarios page, we had basically two groups of things to consider for Chile's outlook, which I have broken down on this page, where effectively it all comes down to, at least in the immediate term, the COVID-19 management, both at home and abroad, and then maybe more longer term is the social and political dynamics of the country. So I'm going to talk about each one of these two things individually. If we're looking at COVID-19, the main positive thing here is that that Chile is by far the regional leader in vaccinations. It's honestly really impressive that Chile has been able to pass even the United States in this endeavor as a percentage of population. And you can see that Chile is really far ahead of every other country in Latin America, which I think leads to a couple of very interesting insights. The first is that I think Chile could end up being a template for the rest of the region as it pertains to economic reopening. So once Chile, gets above 50, 60, 70, and even approaches 80% of its population vaccinated, the government will probably take steps to do more indefinite economic reopenings. And it'll be interesting to see what happens with the spread of the virus and with just general state of social and civic life in Chile once we get to 80%. Because if things are, let's just say, normal again, if we put that in air quotes, in Chile, after they've achieved herd immunity, say in October or November of this year, then I think that's going to say a lot about what we can expect for the outlook for other countries in the region when we get to herd immunity in those countries, which may be 6 to 8 months later. So I think that's one interesting insight. And the other thing is kind of related to the first point and something that you mentioned, Mariana, that Chile is kind of going through a second wave of infections right now. I think it's kind of interesting that Israel also saw something similar when they were going through a pretty massive vaccination effort. I don't think they're necessarily related, but what I will say is that I think it's pretty clear that this will probably be the last time that Chile will have to do social distancing. We've already seen social restrictions ease in Israel pretty significantly from the state of where they were at when they were only about 20 or 30% of the population vaccinated. So overall, I think this does bode well for Chile. I think that this basically means, hey, economic activity may be a little bit flatlined during March and April, but once we get into the second half of the year, it seems really, really certain that we're going to be in a relative state of normality compared to what we were now, so long as the pace of this vaccination continues. Any questions about the general state of COVID in Chile? Because this is the only slide that I have for COVID right now, at least domestically.
Yeah, I guess my question for Chile would be, is the reason Chile's kind of vaccination efforts have been so successful due to kind of having negotiated early contracts and widespread contracts? Is that why they were able to effectively organize the vaccination rollout?
Good question. So that's definitely one part, and I think there are three answers to this question, potentially a couple more. The first one is as you said, they were early. They purchased a lot of vaccines pretty early on in 2020 relative to other countries. So there's not just the early action, but there's also pretty high quantity. We've already seen Chile actually donate some vaccines to Uruguay and Paraguay. And I think they may be in the position to do even more than that, because they have procured well over 100% of the doses necessary to vaccinate the entire population. So there's a quantity question. There's also a diversity in the vaccine portfolio. So Chile has vaccines from Pfizer, Sinopharma. They're talking to Sputnik 5, AstraZeneca, et cetera. And I think that plays a huge role because a lot of other countries in Latin America have been somewhat reliant on either one or two vaccines, whereas Chile has access to, at least 4 or 5 and is in discussions to get even a few more than that. And the last thing is that there's been, this all-in mobilization mentality of the governments, of policymakers, civic leaders, people who work in healthcare, where you've seen basically, the Estadio Nacional in Santiago basically turn into a vaccination center 24 hours a day. A lot of places and people that were not necessarily doing vaccinations are doing both, which I think is something that is extremely differentiating for Chile. And there's also, just generally speaking, so I guess this is reason number 4, but there's generally a very strong vaccination culture in Chile. They've had this vaccination plan in place since the 1980s. And I think that's something to be said because there just isn't a lack of willingness to get vaccinated in Chile. If you look at polls, you'll see that, by like a vast majority of the people have either been vaccinated or plan to get vaccinated. Whereas if you compare to other countries where you have a little bit more anti-vaxxing sentiment, Chile doesn't really have that in great quantities. So I think those are kind of the four maybe main reasons why this has been the case in Chile, on top of just having a generally good healthcare system. But overall, it's been, a full-fledged effort and something that's been planned out for quite some time.
Thank you, Alex.
Great. Okay. So from the external standpoint, really this is kind of the main opportunity for Chile right now, on top of the vaccine recovery and what that means for foreign direct investment and what have you. But just generally speaking, something that's been a guarantee for the economic recovery has been copper. And copper prices are basically at their highest levels since they've been for about 10 years. And we've seen monthly copper exports really explode as a result of this. This graph shows quarterly moving average, but we've seen a couple of these months where we saw copper export revenues grow by more than 70%, 70% year on year, which is extremely substantial. And it's not just a base effect. In absolute terms, some of the months of copper exports have been the highest levels that they've been in several years. So this is definitely having a massive economic impact, and it's something that we should probably expect to continue in 2021. Most independent observers expect copper prices to remain rather high in 2021 and potentially go even higher than where we are right now. And really, this started from China's economic recovery, which was way faster and sooner than expected. Definitely very focused on infrastructure as usual and factory work. But also we're seeing, the green energy revolution around the world, and how there's a lot of emphasis on the green economy following COVID-19. And then from the supply side, there was the fact that Peru's mines were basically shut down for several months last year, and the fact that there is, generally speaking, a bit of a supply deficit in the global copper mining industry. Not to get too much into the weeds here, but all of this suggests that the price of copper should stay pretty elevated, at least in 2021. And that definitely bodes well for Chile in terms of exports, but also in terms of the currency. And that's something that we've seen definitely improve over the last 6 to 8 months. From the record lows that we saw, the Chilean peso over 100 or 850 per the dollar, now down to closer to 700, between 700 and 750, hovering around 720 today. This really has caused a total reversal of the peso depreciation that we saw in 2020. And we actually ended up seeing appreciation year to date in 2020, which was kind of interesting if you think about the course of the value of the peso over the course of the year. And overall, we do expect the peso to be stronger on average in 2021 than 2020, close to the average about 735 compared to, I think the final amount was about 790, the average for 2020. So again, this is a pretty big appreciation, which is definitely going to help with margin pressure, especially if you're an importer into the Chilean markets. And part of the reason why we do think that's the case, on top of the copper prices, has something to do with the vaccine rollout as well. We've seen a lot of financial inflows into Chile in terms of financial assets, and this could end up replicating in terms of hard assets and foreign direct investments. This always helps the value of any country's currency. And because of the vaccination, we should expect domestic demand to be really, really strong in the second half of this year in particular, which would help demand and just generally speaking, to strengthen the currency over the course of the year. That said, we should still expect some volatility around some of the key constitutional votes and key political events, because we have a loaded political calendar, which I'll show you in just a few pages. And that's something I think that is important to keep in mind, that there is a lot of uncertainty. Markets don't like uncertainty. And in the case of Chile, there is a lot of fears of whether or not we're going to get a total change of economic model. So overall, those are kind of the two countervailing factors. If the political uncertainty does not end up being as intense as maybe I perceive it to be right now, then you could see a much stronger strengthening of the currency than even our base case forecast. Questions before we continue on to the political situation?
Yeah, so I know you talked about political uncertainty being a factor, and one of the factors you also have listed there is social unrest. That was kind of a big factor in 2020, but not going to be so much so in 2021. Do you think that that is kind of surrounding the fact that the constitutional process seems to be highly popular? And while you might see kind of unrest around key constitutional votes, it won't be kind of overall as all-encompassing as it has been previously.
That's a great question, and honestly, you kind of answered your question for you because I'm going to talk about that exact phenomenon in just 1 second. Because basically, the short answer is yes, there is a strong popular mandate for writing a new constitution, but I'll get to that in a minute. So, one thing I do want to emphasize about this process and about the political calendar overall, it's extremely noisy. You can see basically all the key votes are kind of on the bottom of this timeline. You have presidential primaries in July. You have general elections in November, and there will likely be a runoff in December. You have local elections the same day as the Constitutional Assembly elections. So that's all really noisy in of itself. And then during this time, from May to at least February of 2022, with likely a 3-month extension, you have the Constitutional Assembly writing the Constitution. And there's probably going to be all kinds of headlines going on in local and international media about what's being discussed, what will likely change, what might not change. And this is going to cause people to react in one way or the other. So again, this is just a really long and bumpy road for 2021. And part of the reason why I think it's maybe this is probably the main reason why I do caution people to at least hit the brakes a little bit with overall Chile outlook for 2021, is just because this is just inherently a very uncertain period. Even though there are certain exogenous factors and endogenous factors, such as the vaccine, such as copper, such as the fact that the economy wasn't really hit all that badly last year, these all seem to show that Chile is going to have a booming 2021. But caution with all of the things that we have on the calendar in 2021, because even though I do think that they're mostly headline risk at the end of the day, I think it's still important to keep in mind that volatility does make a difference. And this is something that we should expect to live with until July 2022, which is when there's likely going to be a popular referendum on the Constitution. Now, to answer your question specifically about how this impacts social unrest, I think that the main reason why we're a little bit more neutral to, I guess, cautiously optimistic about the social panorama in 2021 is because of how strong of a mandate the Constitution got in the plebiscite of October. And basically in this plebiscite, Chileans were asked whether or not they wanted a new constitution or not and how they wanted it written. And you can see that you had close to 80% of Chileans approve. And you also had close to 80% of Chileans choose a newly elected constitutional assembly. In other words, full of people who are not currently represented in Congress, the cabinet, etc. And on top of all of this, you had the highest turnout in any election since 2012. So these weren't just fluke numbers. People want a new constitution in Chile through and through. And I think that's something to be said, because after this vote has taken place, we've seen, some social unrest take place. There are basically weekly protests that happen on Friday in Plaza Dignidad or Plaza Baquedano, whatever you want to call it, just because its name has changed a few times since the protests have started. And obviously those create your images for media about people still protesting and what have you, but the level of protest in terms of intensity and the amount of people has really, really fallen off ever since this October election. And if we remember to where we were in 2019, when the protests started, one of the main demands was a new constitution, to change the constitution that was written during the military dictatorship of Pinochet. So that has been something that I think has been a key demand for society. And to that end, I think that this is going to solve, at least cause a honeymoon of social peace. On the other hand, I think what the big risk now is if there is either too much change or too little change in the new constitution. there's too much change. If you have a really state-heavy rhetoric prevail in this new constitution, and maybe I flip forward one slide just to show you kind of an example of some of the things being discussed. But if you have a really state-heavy rhetoric prevail, such as having the central bank independence diminished, or if you have free trade agreements being revised, or if you have entire tax regimes put into the Magna Carta that are very different than the ones that exist now, then maybe you have, well, not maybe, you most likely will have less investment appetite to Chile, both domestically and internationally. On the other hand, if you have too little change, then I think that you may not have satisfied the demands from protesters, and you could end up having more protests in 2022 and potentially just a disapproval or a rejection of the constitutional referendum in 2022, which would bring us back to square one. And I think that's something that is a pretty big medium-term risk that I think that is not being discussed maybe in as much detail as it should be, because it's clear that change needs to happen for people to be satisfied. But keep in mind that, and the subtitle here suggests this, that each change is constrained to 2/3 approval. Each article of the new constitution needs 2/3 majority of the constituents approving it in order to move forward, which means that there are going to be compromises, and there's probably going to be a lot of watered down initiatives. I think there are certain things that are virtually guaranteed to be in this constitution, such as some sort of universal healthcare and education initiative, property rights, and particularly water. Water is probably going to be public again instead of privatized. And then indigenous rights, that's been something that's been very important for the south of Chile. There's virtually a guarantee that we're going to see seats in Congress basically put in place for them. So yeah, you'll see changes, but will they be enough changes? We'll see. I think that overall, we should expect marginal changes, and my base case is it would be satisfactory. But I think that in the end of the day, and I'm going to come back to the political slide in a minute, that the Constitution can say one thing, but reforms are the things that actually matter. Laws are the things that actually matter. You can say that you guarantee healthcare and education in the Magna Carta all you want, but if you don't have financing or a law to back it up, then it means nothing. So to that end, I think passing reforms, and particularly the pension reform, sometime this year is going to be crucial. There's a lot of noise about what's going on with that pension reform right now. It's basically stuck in the Senate with many different proposals going on, but we'll probably see some form of the pension reform passed in 2021. And then, having actual reforms on the education and healthcare fronts simultaneously to this Constitution publication would be great. I don't think you'll see the ultimate approval of especially healthcare reform until after the election. The presidential election, I mean, just because it's kind of a lot to vote on in just 1 year. And they're probably just going to kick the can down the road to the new administration. But it could be something in an upside that you see approved in 2021, because there are existing reforms that are, sitting around in Congress. So overall, a long-winded answer. And that's how it affects Chile socially. As far as politically, I think that's one thing that is highly uncertain is who will end up being the winner, if you want to say that word, of the constitutional vote in April, because the vote is probably going to be very fragmented and probably introduce a lot of new faces to the political scene in Chile. You can see in this poll on the right that about 34% of Chileans back in October were opting for an independent list, which I think is really interesting because you can see all the traditional parties and coalitions listed here. Nueva Mayoría, which is ex-Concertación, the center-left coalition that basically led Chile every year besides the two Piñera administrations since democracy. Chile Vamos, which is Piñera's coalition. You have the Communist Party and the Frente Amplio coalition, which surprisingly had very low voter intentions for the Constitutional Assembly vote, and they're the ones who were pushed for the Constitution the most. So it's going to be really interesting to see who ends up emerging as the main winner of this constitutional vote. One thing I'll mention that I think relates to the 2/3 approval is that the right wing or the center right wing parties have all coalesced behind one list. Meanwhile, the left is disparate and is on many different lists. And because of that, you'll probably see something that looks pretty close to Congress in this new Constitutional Assembly. And you definitely have over a third of the Constitutional Assembly, related to Chile Vamos or the right-wing coalitions, which means that I do think that the more radical elements being thrown about, such as totally public pension accounts, and even if there are some chatters about lack of central bank independence, I don't think that there's a very high chance that those more big changes happen in this constitutional vote, just because of the reality of the votes lists. I think that's something also important to keep in mind. And how this ends up taking place, I think, is going to have a massive impact on the elections themselves. Obviously, it's very early to speculate, but I think overall the main message that I want to portray is that the April constitutional vote will likely have a pretty big impact on these presidential elections. Whatever body or party or part of civic society that emerges pretty well represented in the Constitutional Assembly, I think will end up having a strong influence on the presidential elections. Especially if you consider that poll said that a third of Chileans were opting for an independent list. Therefore, I still think it's very early in these presidential polls, and we could see someone's name who's not even on this list emerging as a very competitive candidate, or even potentially the favorite as we get closer to these November first rounds. If we were just looking at the polls right now, it looks like Daniel Jadue, which is more a leftist candidate from the Communist Party, and Joaquin Lavín, who is from Chile Vamos, but is himself a bit of a populist, are both definitely two of the top vote getters in the polls that we've seen for the last 5 to 6 months. But again, I think it's very, very early to tell. And if we're looking at Peru as any sort of guide as what may happen on uncertain elections, we've seen polls in Peru really kind of flip script 100% in the last couple of months right before the election. So I wouldn't be surprised if that happened in Chile. And I think it's a little early to call the winner or even make a prediction of who would win this election. So let's see what happens in April. And it will definitely have an impact on these polls in November and December of this year. Any questions about the politics so far, Mariana?
Yes, so what I would ask here is, I know that Piñera has had some pretty bad approval ratings of late, but simultaneously, the situation with COVID is working out quite successfully, at least on the vaccination front. So how possible do you think it would be for somebody from Chile Vamos or a party kind of close to that ideology to sort of distance themselves sufficiently from Piñera in order to potentially take the presidency in a year?
I'd say it's a better chance than anyone from Nueva Mayoría winning. Let's put it that way. I think that the key challenge for the Chile Vamos candidates, who will likely be Joaquin Lavín at this stage, even though it could be Evelyn Matei as well. I think that his or her main challenge will be to say, look at the competence of the healthcare administration of, this presidential administration over the last couple of months. And if they rely on that message significantly and basically signal that we're going to keep this, body of professionals in the cabinet, we're going to continue this successful rollout, and they perceive themselves as this highly competent set of individuals who also can give an ear and tune in to what social demands are, I think they have a pretty good chance of winning. I do think that, however, many Chileans still view Piñera and therefore Chile Vamos as one of the main culprits of the poor handling of the 2019 protests. So I think it comes down to what will end up being top of mind in those elections. If people are vaccinated by the time elections happen, I think you have a little bit more emphasis potentially on the social debate and a little bit less so on the COVID success. So that's the reason why I think that it is going to be important for whoever stands for Chile Vamos to distance him or herself from Sebastian Piñera himself, because even though Piñera can rightfully be credited for a lot of the vaccine success, I don't think that a lot of people are totally buying into that in terms of his own personal approval. Meanwhile, the healthcare minister's approval ratings are way above 50%. The approval ratings for the government's handling of COVID-19 are way above 50%, but the approval rating for Piñera's management is still around 20. So clearly there's, a character issue there, a personal issue there that I think that whoever runs on the center right will definitely need to differentiate him or herself from. That's a great question, by the way.
Yeah, that makes a lot of sense. Thank you, Alex. So interesting.
Thank you. One last thing I wanted to mention, I think that this actually transitions to the consumer spending outlook quite well, is generally speaking, a lot of the positive economic momentum that has occurred, especially in the third and the fourth quarter of 2020, has had to do with two separate pension withdrawals that have resulted in an injection of about $32 billion into the economy. This is obviously a substantial sum of money. That's about 20% of total AFP funds. So it was 10% the first time, 10% the second time. And it's kind of interesting to see the destination of those two withdrawals, because the first one was clearly for more essential purposes, buying food, paying down debt, paying utilities, etc. Whereas the second withdrawal was a little bit more focused on discretionary spending, investing, paying mortgages, pursuing hobbies, things that were a little bit more, I guess, discretionary in nature. And that clearly has resulted in a lot of short-term opportunities for our clients, especially B2C clients. On the other hand, I think that's something that our clients ask a lot about is what are the ramifications of this? Because the long-term risks of these two pension payouts are pretty significant, because it is a $10 to $15 billion fiscal hole for the governments over the next 10 to 15 years. And even though a lot of these costs won't be fully obvious for the medium to long term, it's clear that this is putting a lot of pressure on the government to reform the pension system. And this was before we had all the pension protests during the last Piñera administration and during the Bachelet administration because of pension payouts being too low. So now there are a third of Chileans without pensions at all. And right now the Congress is debating on a new pension reform. It's going to be extremely important for this Congress to approve something that does robustly increase the solidarity pillar and individual pension accounts as much as possible. Otherwise, the government is going to have a huge burden and liability on its hands, 5, 10, 15 years, more towards the later end of the spectrum down the road. Either way, it's a risk. It's a big fiscal risk. And it's something that I think the government needs to solve sooner rather than later. And my own personal policy recommendation, even though it's not solicited in this situation, is that I really think the government should just approve the pension reform that's on the table now. And if they need to go back to the table to tweak it in 2 years, go ahead. Right now, there needs to be more pension contributions, period. And I think that's something that the government is starting to realize. And part of the reason why I think a reform is very likely to be approved this year. Okay, so let's transition into the consumer spending outlook. The first thing I want to say is that, we saw a very strong recovery of the overall economy, especially in the fourth quarter. And the light blue bar, which is consumption, clearly was one of the main motors of growth during that time, where we saw consumer spending grow by about 5% year on year compared to the fourth quarter last year. That's really impressive. Even though there was a favorable basic comparison, these are the protests in 2019, it's still a very solid performance by retail overall, private consumption, as well as government spending. And I do want to spend a little bit of time during this last 10 minutes breaking down our consumer spending outlook for Chile, because I think it's very nuanced and is a decent proxy for a lot of what we should expect for other countries in the region. So let's start with the good news. The good news is that retail has been full-fledged, broad, and surging really since about the early Q3 of last year. You can see that both of these charts suggest double-digit growth of retail sales, both from a durable and non-durable standpoint, for several months last year, including January of 2021. And if we're looking at individual product categories compared to January 2020, you can see that basically all product categories have performed quite well in Chile over the last rolling quarter. Really the main exception being gasoline, but people aren't really driving, so that kind of makes sense. And overall, this has been a pretty strong recovery. You can see a lot of durable goods being purchased through construction materials, electronics, solid discretionary recovery out of clothing and accessories, as well as consumer basics such as food being really well represented, as well as new cars. And new cars in particular had a couple of very strong months in 2020, potentially because of these pension withdrawals. So I did want to point that out, that this has had a very strong impact on consumption. And honestly, probably more than I think that we expected, even after the first withdrawal. So it's quite eye-opening to see these numbers. This is definitely the case, too, for our clients. And we asked this polling question to a Latin America B2C virtual webinar about 2 or 3 weeks ago. And you can see that Chile is the #2 most resilient or top-performing market for our clients in 2020. I think that says a lot, and based on the page that we just saw, it kind of makes sense that we've seen retail performance in Chile being very strong. But this is where I start talking a little about the catch-22 of all of this, the bad news. And I want to say very clearly to be wary of the hangover effect on the pension withdrawals, because that has been clearly the thing that is sustaining consumption right now. And I highly doubt a third withdrawal will happen. It just seems like there's just no appetite for it from the official, that was a Spanish translation, the incumbents administration. And the Constitutional Court will likely strike it down, I think, if it gets approved by the Congress either way. So we shouldn't expect a third pension withdrawal, which means that this sugar effect is going to inevitably wear off. And when it wears off, job recovery, the wage recovery, consumer credit are going to be really important. And as you can see on this chart on the right, we're not expecting any kind of credit boom, because consumer debt as a percentage of disposable income is honestly a little alarmingly high in Chile, at over 70% of disposable income. A lot of this is mortgages. And this is despite the fact that consumer lending rates are really low. I think consumer lending rates are probably at their floor as well. If we think about the fact that inflation will probably come back to some degree as the economy reopens, and as prices, or as producers start to pass on prices to final consumers, we should expect interest rates to go up in suit. I do expect there to be a rate hike sometime in 2021, probably towards the end of the year, potentially more than one, depending on the path of inflation, which means that this consumer lending rate's probably not going much lower, in fact, the opposite. So overall, you can see that in this chart, if we're looking a little bit more in detail, we do expect annualized contractions in consumer spending for at least the third and the fourth quarter of 2021, before more of a sustainable recovery in 2021 or 22 on the back of the overall job recovery and more sustainable credits. I think that this is just a big watch out for our clients that operate in Chile, especially our B2C clients, because I don't want them to be caught off guard too much when this happens, because the money's got to come from somewhere, if we're going to be honest. And if we're looking at kind of our general framework for consumer spending, this shows you the picture of basically what I'm talking about. The short-term impact on retail sales, but also low influence on sustainable consumer spending growth, really comes down to stimulus and social distancing measures, both the imposition as well as the reopening of economies. These are both short-term impacts. These are, not going to be a factor, hopefully, in Chile's 2022, 2023, 2024 outlooks. And, after these one-off events basically occur and start to fade away, then you have to ask yourself, okay, well, where's the money come from? Where's the demand coming from? And the answer is from real wages, jobs, recurring transfers from the government, remittances, which is not as relevant for Chile, more relevant for countries like Mexico, and how consumers use those savings, what the relationship with credit is, and then some of the other X factors being consumer confidence and wealth effect. All of these things are really important for sustainable consumption growth. And overall, again, we're going to need to see more of a stronger job recovery out of Chile to get back to consecutive quarters of growth in 2021 towards the end of the year. So one thing that I want to mention that I think I didn't mention very sufficiently during the COVID-19 section of the presentation, if we were looking at the star of social distancing measures in the top left corner, really what we can see is that restrictions aren't really doing anything or doing Chile any favors right now. Mariana, you asked about this pretty early on in the presentation, and you can see that mobility in Chile has fallen a good bit, both in terms of driving and in terms of walking in the last couple of weeks as Chile's government imposed new restrictions. Not surprising. This is going to have a negative impact on spending in the immediate term, at least in bricks and mortar sales. I don't think it will be catastrophic because Chile still has strong B2C or e-commerce infrastructure, and overall, these will probably be shorter duration restrictions than what we saw last year. So overall, I think that's something important to keep in mind. We'll probably see, on and off social distancing measures that are very localized over the course of the year. I think as the year progresses and as more people get vaccinated, then in Chile, you're going to get even more nuanced and targeted with any kind of social distancing, if any, especially in the second half of the year. Well, you could be back to like block by block restrictions that we saw kind of at the very beginning of Chile's management of COVID-19. And I think that's, something we should expect is some bounciness to this. But overall, as I mentioned at the beginning of the presentation, I think that we're probably on our last big set of social distancing measures currently. As far as how jobs match up against the rest of the region, you can see that Chile is still kind of catching up to where we were back in February and January of 2020. The good news is that we have seen a decent recovery. I think that we're going to need to see more investment in Chile in order to really start amping up the slope a little bit. Otherwise, right now, it's a little bit flat. And I think that's important for us to keep in mind when we are looking at our consumer spending forecasts, that it's probably going to take several more quarters for Chile to get back to close to pre-pandemic levels of employment. The last kind of main theme here that I wanted to bring up is we're likely to see some reversal of the savings and credit demands trends to help fill the void of retrenching stimulus, or in this case, the fact that Chileans will likely not have a third pension withdrawal. So you can see that savings rates for Chile have gone down a lot, in 2020. This is basically pensions, right? So, now that there are less and less savings for Chileans to tap into, and the job situation isn't monumentally improving, you probably will start seeing Chileans take on at least a little bit more credit. I'll show you the same chart that I showed you a minute ago here with Chile, that, basically, the consumer debt burden is still pretty high. But I do think that, as the economy reopens and there's less stimulus and people may not have a job, you're probably going to still see some reversal of this credit trend, at least to being, at least upward sloping. I don't think we're going to get back to where we were before COVID anytime soon, but I don't think you're going to continue seeing credit demand drop by in the double digits every month in 2021. So in the meantime, where are the opportunities? I think the main opportunities are really connected to some of the main macro trends that we were talking about, in particular the commodity boom. And this is kind of one area where I think that it will be interesting to monitor the supermarket sales and the employment data of the major mining regions in Chile. And you can see that some of the main mining regions, such as Antofagasta, Atacama, Tarapacá, have all outperformed the general index, the national index of real supermarket sales last year. And these are full year supermarket sales. So I think that's something interesting to keep and watch for. The employment story, which I'm not showing, is a little bit more nuanced. There isn't really a major outperformance by the mining region yet, but it is definitely still being relatively resilient. So I think that over the course of the year, you could start seeing windfalls into the hands of consumers that live in these provinces. And if you're a B2B company, for firms that either directly or indirectly deal with the mining industry, just because I do think that this is a trend that's going to last with some duration, at least for the end of this year, probably into 2022 as well. And then overall, again, their economic reopening trade will be a big deal in the second half of the year. In other words, there's still a lot of pent-up demand. You'll see Chileans traveling more and more once they get vaccinated, making purchases that they may not have purchased a year ago during the midst of the pandemic. There are Chileans who have the discretionary income to do that. So keep in mind that those are maybe the two opportunities right now: the reopening trade towards the end of the year, as well as subnational dynamics for the time being. So that being said, I think that is the end of my presentation. I wanted to thank all of you for your time and for listening to this presentation, and to Mariana for moderating. I do want to see if you have any final questions or comments before we end the call.
No final questions. Thank you so much, Alex. That was a really great overview.
All right. Thank you, Mariana. And thank you, everyone. Talk to you soon.